So welcome back to June 28th, 2024 weekly coaching call for Investing Accelerator. So this week is relatively simple. We're going to go through S&P 500 and QQQ. Quickly talk about monthly passive income and the long-term investing selections. And then I'm also going to talk about MU earnings as well. So we don't have an individual stock to review this week, and we're just wrapping up June, so it should be a fairly straightforward / short weekly coaching call. All right, so right now the SPY RSI is 78 and the QQQ RSI is 76, so that means the S&P 500 is still overall leading. Now if we look at June, let me just go to SPY. It's a fairly bullish month. So the last 4 weeks is fairly bullish, which is in line with my analysis / forecast here. Now for July, I still forecast it to be overall bullish, but we're heading into a period where getting really close to the turning points. And I expect the momentum will start to slow. So in terms of price, for both QQQ and SPY, I think it's pretty high. Now, when it comes to indexes, it's really hard for it to go into a correction, so something like that. If you look at the recent April correction, it was only 2 weeks. So if you're long-term holding indexes, I think it's fine if you don't exit. But if you have, significant amount of leverage positions, then you can consider deleveraging in the next 4 weeks. So based on my forecast currently, the next 2 weeks, I'm still expecting SPY and QQQ to be bullish, but I will be careful after July 15th to 24th. And this is also where the earnings season is. So if you feel like you're significantly leveraged, you can start taking profits, ideally in mid-July or very close to July 24th. And the next interest rate announcement will be the end of July, 30th to 31st. And I think that will be a major turning point. So if you feel like, hey, you want to hold more cash before this point in time, I think it's a good idea to take profits the week of July 24th, right before this interest rate announcement. Now, if one of your portfolio is long-term and you don't need to jump in and out, then don't worry about it. But you just need to be comfortable holding through this dip. So my expectation is that in August and September, we should see some sort of downward move. And then if you have cash on hand, that will be a good opportunity to buy if there are any discounted stocks that we go through during that time. And afterwards, as we get closer to the election, like October, November, we will be bullish again, election results announced, and in December will be a relatively slower month. Okay, so that's what I forecast here. So for example, let's say I have QLD position. Now previously we got in around here. We got in some here, here. And right now QLD is at $100. It's a leverage index fund. It has a good amount of risk. So if you don't want to be holding that much leverage in August, then you need to take profits in July. So right now I'm still holding, and when I exit, I'll let you know as well. And that will also be my signal to deleverage. But if you're looking at an individual stock, then you need to look at the technical analysis for the individual stock. Now, if you have cash, just hold for now. And the reason is because let's say you got in, July 2nd. July 1st is a holiday. And it goes up for a week, and let's say another week. And that will already get you to July 15th. So that means if you think that's the peak is around July 24th / July 31st, then you need to exit after 2 weeks. So that means if you have cash and you're trying to buy right now, you need to be prepared to exit in 2 weeks. Or if you have a much longer term view and you find a discounted stock that you really like, then fine, you can hold through it. But I think the real opportunity will come somewhere around here. Now, of course, when it comes to forecasting a correction on index, it's difficult in the sense where indexes don't go on a discount that often. So I gave you the forecast here, and right now the RSIs are around 70 something. So it's still quite high. So the confirmation you're looking for is, let's say, 60 or below. So if you see the RSI start heading downwards to 60 or crosses over below 60, that is your confirmation that this forecast is correct. So for now, everything looks, fine and dandy. And if you start seeing the RSI come down to 60, that is a good indicator that this forecast is likely correct, and you would take profit. So even at 60, the overall market will still have some positive momentum, so it's not too late to take profit. So for example, if you look at the previous drop here, even at around 60, you still have 1 to 2 weeks before this significant drop happens. And if I go back to here, at 60, you can see it's just 1 to 2 weeks of downward move. So you're still exiting relatively high here, and then you would, let's say, hold some cash. You don't need to exit everything, only the leverage ones that you feel like you can enter lower, and then you buy back again. And this is true especially for individual stocks where it's more volatile. For indexes, if you're busy, you don't want to re-enter in August and September, and you want to hold through it, I think that's fine. Okay, so that is kind of the game plan. Is if you have cash, hold. If you have leverage positions, you can already start taking some profit incrementally in July, and ideally before this interest rate announcement, because I think there's a lot of uncertainty there. And then if it does go down, then you would wait for August and then September. So if it is going down a lot, then you can buy before this interest rate announcement, which can be another potential turning point. And the key is to you look at the RSI for the confirmation. So if the RSI is still 70, then you can just wait. If the RSI is heading below 70 towards 60, or even crosses over 60, then just take some profit. Even if you just take it and hold it for a couple of weeks and the market goes down, you can get in lower. And this is especially true for a more active portfolio. And if you feel comfortable holding through this dip, then don't worry about it. Okay, so that is the plan, and just decide how active you want to be. All right. So for June 28th expiries, it's expired at a profit, so that is fine. For QQQ, this debit spread, we closed this earlier, but if for some odd reason you didn't close it, it's not the end of the world. I think you would just, the upper strike gets triggered where you need to sell the QQQ shares because you sold a call. But at the same time, you also get assigned a call. So then it should all net out. But it's just a good habit when it comes to debit spread to manually exit. So you choose close, and then you close both of them together. Now for the July 19th one, it should be at max profit. So if you still have this 422412 debit spread, you should close it at max profit, which is around $10. So it should be 9.9. So that's what you should exit it at. And then for the rest of the positions, they're going up. And for this week, QQQ is also going up. So 445, 435 is also okay. Looking at my forecast, I'm still bullish for QQQ next week. So I think it is possible to enter one more through this earnings season. And then we'll see how it goes. And then if I think the market is too high, then we'll take a break for monthly passive income for a couple of weeks. Yeah. So that is the trade last week for QQQ. Now, in terms of long-term investing, okay, so right now, I mainly have QLD here, which is what I consider to be medium risk, and the goal is 20-25% per year. So like I mentioned earlier, if you have one of these high-risk combinations like TQQQ, SOXL, FNGU, and you want to take profit, July is a good month to do so. And if you still want to be in the market, then switch back over to SPYQQQ. So if there is still lasting momentum, you'll still get some gain. It's just not as aggressive. If August does end up going down, then your drawdown will be a lot less compared to holding these ones. So it's just a matter of, deleveraging. And if you want to stay in the market, you can stay in the market with SPYQQQ. But I would try to avoid holding too much leverage index funds in August and September. So those are my forecast 2 bearish months. All right, AMD. So right now, AMD is actually forming a W. So it's a little bit rough in terms of the W shape. But you can see that a bottom is forming around 150. Right now, the stock is bouncing above 150, which is also a good sign. So if you want to buy, you should enter soon. If you see a jump up to 180, then don't chase it anymore. So I think the bottom is still around here. I think that's okay. Google. So it is steadily going up, breaking out now. So if you previously entered in this area, 170, 180, that's fantastic. Yeah, if next week is back down to this 180 level, you can enter. And I expect Google to be doing well for this earnings as well. So if you have a position, you just hold it. And I think you can hold through earnings for Google. But if you're happy with the profit, you can take it as well. So my goal is 200 to 210 near the end of the year. But right now it's already 185. So if it does have a good earnings, pushes us up to 200, that's quite possible. Meta. So looking at the stocks, like for example, Amazon is actually taking off slightly. You can consider Amazon as well. I think Meta is one of the ones that's lagging behind. So compared to the other big tech like Apple is going up, Google, Amazon, I think Meta hasn't broken out yet. So if you're interested and you feel like you missed out on Google, you can do Meta. Yeah, so Microsoft here, you can see it kind of broke out too. So Meta is kind of the one that is lagging a little bit behind. All right, Micron Technology. So earlier this week, I said that Micron Technology had an 80% chance of it going positive, but turns out the revenue forecast is lower than Wall Street's expectation, even though the earnings is good. So it kind of went down from 141 to 132. Now, if you don't like Micron Technology or you don't feel like holding on to the stock, then you can exit and you can swap it over either for Google or Apple. So for next week, I'm still bullish on both Google and Apple. So if you feel like, hey, you don't want to hold on to Micron Technology, then swap it over. Then I think you will recover faster and you'll exit in late July. The next stock is CMG. So one of the students want me to quickly look at it. And this is after the stock split. So here you can see CMG actually had a fairly good run up. And for the last couple of weeks, it's flat. And what you see now is the RSI is going down from this 90 level down to this 57 level. Now, with the stock split completed, and you can see there's a giant, pin and then bouncing down from the upper BB. From a technical point of view, I think it's better to wait to see if it goes down more, because what I'm describing, for SPY and QQQ is once you see the RSI coming down to 60, you don't need to buy immediately. You can wait and see the bottom first. And likely after the stock split being so bullish and then now it's coming down, most people are probably taking profit. Because what happens is that most people are so bullish right before the stock split. After the stock split, they expect retail investors to kind of buy in and they will start taking profit. So what you get is kind of like the buy the rumor, sell the news situation. Because after the stock split is complete, the stock will go down, which is what you're seeing now. So right now it's the second week of it going down. So let me just show you. 2 weeks going down. So there's no need to jump in to CMG, especially if we're so close to the July turning point if it does happen. And we can see that the RSI is 57, so it's already below 60. And looking at this top, it looks like there's a potential to go down to this 56 to 52 level. So I think you can track CMG on a weekly basis. It will likely be a good stock to buy during August or September. So compared to the overall markets like SPY and QQQ, you can see the correction for CMG is happening faster because of the stock split. Okay, so yeah, let me just add the name here. Yeah, so that's my quick comment, meaning you just wait for CMG because the stock split just happened and now we're seeing some correction. So I guess I'll add some quick comments about Nike as well, because one of the students asked whether they want to buy Nike at this dip. So Nike is a pretty tricky one. So we know the business is all right, but recently they haven't been doing well because of weaker China sales, which is a large part of Nike's business. And overall, the China economy isn't doing too well. So we shouldn't expect the China economy to come back anytime soon because US interest rate is high and the US-China relation is also not that great. Now, while I don't have a position in Nike, I guess here is an example, which if we look at the RSI, we know that it is generally difficult to make money during this time. So during this positive RSI period, you can see making money is relatively easy until you get to this below 60 level again. And then it's kind of flat with slight bump, and then afterwards it starts going down. Now, from here onwards, you can see the RSI is below 50. And even if you bought at a relative dip, meaning here, like right at this pin bar and your timing was perfect, the odds of you being profitable is actually quite low and also short, meaning you need to take a profit relatively quickly. But psychologically speaking, you would want to hold because you think you got in at a good price, so you would actually never exit even at this high because you wouldn't know that is where it turns back down. So then it comes down to this RSI dip. And during this period where the RSI is below 40, it was actually not a good buy at all until the turning point, which is around here. And then it comes up. And then it's not until it crosses over 50, then you get majority of the bull wave. And then up to the upper parts of the BB extended, and then comes back down. Now, with the overall China economy not recovering yet, this is a difficult position in a sense where the periods of being profitable is very short. So as long as the RSI is negative 50, you would generally avoid buying. Okay? Up until I think even this earnings, you can see the RSI is actually just hovering around this area. So even though they have, I think only an earnings beat, but a revenue miss, you can see it went down significantly. And that pushes the RSI back down to 23, which suggests you would just wait. And usually for these large drops, it doesn't turn around that quickly. And this is I guess, a good example where the RSI helps you avoid majority of the downtrend. And you know that you don't really make majority of the money until RSI is above 60, which in this case, most of the time is not. Because even if you ignore the RSI and just look at this chart, you will need to be very accurate with your timing to catch these two waves, which are relatively short to the number of red weeks you see here. Yeah, so overall, when you're dealing with a flat trend like Nike here, and a weaker China economy, which Nike relies on, this makes it a very difficult trade. So even though it is 75 right now, compared to, let's say, Meta, or even Apple, or even Google, you're probably better off making a faster profit there instead of investing in Nike, even though it is relatively cheap. Now, this brings me to one more example, because I know someone else also asked about this stock. So previously we said about, whenever there is a flat trend and this stock is MDB, it makes it difficult to trade because, well, A, you need to time the exit, let's say upper BB, and B, you need to invest when the RSI is above 50 or even 60. That's where you make majority of the profit. So let's say we look at MDB and we look at the previous wave. So you can see that it actually took a long time to form a bottom here. So if you invest when the RSI is below 40, let's say you got in at a very good price, October 2022, it doesn't take off until May 2023. So if you end up using an option on this trade with such a long bottom, there is of course a significant delay. And second, you can see it doesn't start making money until after it crosses over 60. So instead of making yourself wait through this 40 to 60 RSI period, even if you look at here, you can see between this 40 to 60 RSI, there's not much money to be made. Like you can try to jump in and out of the market, but it's pretty difficult. And you make majority of the money when a breakout happens, which you can see is actually RSI 60 and above. So once that happens, you get one of these major RSI wave. And then once it starts coming back down, you can see the momentum declining. Then it's a good exit. So if you look at majority of the wave, okay, this is not a good method to see it. Let me just draw another box. A box is probably easier than using a Fibonacci tool. Okay, so here you get majority of the wave, where the more you hold, the more money you make. And down below here, you get probably a good amount if you got in at the exact bottom, but chances are you wouldn't be able to get in at the exact bottom. So let's say you capture like this much of the wave, and you capture like half of this, okay? So what you see is that the profit, it's 2 to 3x. So 2x meaning, you can see it's approximately 2x here, 2.5x of the profit you can potentially gain here when the RSI is somewhere between 40 to 60. Okay, so just roughly speaking, if you invest when the RSI is above 60, you can capture 2x more profit. Okay, just let's say I do this, compared to this period. Just looking at this distance alone, right? And in terms of time, if you look at the width of the box, is half the time. Roughly speaking, okay? So let me just, so here, let's say you got in at a relatively good price here. So you get double the profit half the time when the RSI is above 60. Okay, so my quick comments for MDB is, you can see that the RSI is 30 here. So I think a most likely scenario is you're going to form some sort of bottom. With a large drop like this, you're looking at a W. That means you're looking for some sort of formation like this. And once it gets up to 40 or 50 the second time, meaning the W, the second part of the W, then you can potentially invest. And remember, you only make majority of your profit when the RSI is above 60. And I think that is really the key here. So that's why I said, if you're looking at this compared to some of the other stocks we're looking at, let's say Google or Meta or Microsoft, where the RSI is in the sweet spot longer with less correction, you're probably better off, first finish allocating to these first. And then if you have any remaining money and you really like, let's say MDB, then you can invest. But remember, you make money here. So you make money here. So you don't need to be the earliest. You just need to identify the discount initially and then wait for the RSI to turn back above 50 at least, or 60, and that's when the breakout happens. Yeah, so V-shaped recoveries, if it drops and comes back up within a week or two, those are very rare. Yeah, so you make most of your money when the RSI is above 60. Yeah, so I guess in a sense you can see investing when the RSI is above 60 is actually playing pretty safe. But at the same time, it's not about taking excessive risk if your focus is just to make money, but a matter of riding this trend. As long as the RSI is above 60, then you'll still do a pretty good job. So that brings me back to CMG. Now we can see that it is going down. And if it does go down, you don't need to jump in immediately. You can wait a bit. When you see it is at a good price and the RSI heading back up again, like here, you know that majority of the wave happens after the RSI crosses 60. And if you look at this, you can see this white candle. And let's say you're late, you missed the first green candle, you enter here, you still get to capture 90% of the profit. And for CMG, when it comes down to this 60 level, let's say here, okay? And let's say you did get in at the lowest low for some odd reason, 36. And then you hold through this W period. You can see the W, right? It's very obvious with the RSI. You don't make much money until the RSI is above 60 and then ride the rest of the wave. So it's really good to look at the RSI for your favorite stocks because it gives you the profitability most of the time. Yeah, it works pretty well. Okay, so that is pretty much it for this week. And June was a fantastic month. Overall indexes, individual stocks as well. I know some of you took profits and posted in the community, so congratulations to you too. And I think for July, we don't want to be too aggressive. If you hold the non-leverage index funds like SPY, QQQ, I think that's fine. If you decide to be holding through August and September, you just need to be mentally ready for it. If you want to take profits, then for sure do it before the turning point, potential turning points, the interest rate announcement. And if you have cash, then deploy it in August and September for long-term investing. Okay, so we'll start to be a little bit more conservative with monthly passive income as well. So if you don't find one good trade every week, or you just need to take a break for a couple of weeks and let the market do its thing, I think that's fine. So we don't want to be too aggressive at this point unless you see a good deal or you see something with a positive momentum that you think will at least go up for the next couple of weeks, and make sure it doesn't overlap with any earnings. Okay, so that is pretty much it for this week's coaching call, and let me know if you have any questions.